curious case of SVB failure. When a startup receives funding from venture capitalists, they typically keep most of the money in a bank account. Many startups and venture capital firms have been keeping their funds in Silicon Valley Bank, SVB, which has been a major source of funding for the startup community. However, when SVB recently collapsed, it left behind many questions. The collapse of SVB can be attributed to several factors. The first issue was operational problems, as the Federal Reserve increased its interest rates, leading to a withdrawal problem. Startups were not taking out new loans, and instead were using the cash they had in their accounts. The second issue was bad investments. SVB invested depositors' money in bonds, which are typically safe compared to other markets. However, when interest rates rise, the price of bonds decreases, and SVB was forced to sell its bonds at a loss when startups and depositors began withdrawing their money. The Indian startup ecosystem, in particular, has been hit hard by the news of the crisis at SVB. Many startups, which have been heavily reliant on funding from SVB, could face the risk of bankruptcy, leading to job losses and a slowdown in the overall growth of the sector. However, some experts believe that the crisis at SVB could actually be a blessing in disguise for the Indian startup ecosystem. They argue that the crisis could lead to a more mature and sustainable funding model, where startups are not solely dependent on a single source of funding. The collapse of SVB has also had an impact on the cryptocurrency industry. SVB was a major banking partner of the crypto industry and had exposure to stablecoins. The recent collapse of Iron Titanium, Titan, a stablecoin backed by a basket of cryptocurrencies, has had a significant impact on the cryptocurrency market. Silicon Valley Bank, SVB, a major banking partner of the crypto industry, was reported to have exposure to the stablecoin issuer that they pegged, causing panic among investors. In addition, the USDC stablecoin also broke its peg to $1 and was trading below 0.87 cents at one time, and further hampering cryptocurrency prices. However, while some have compared this collapse to the 2008 financial crisis, there are significant differences. In 2008, all banks were involved in subprime debts, but this time, big banks like J. Morgan and Goldman Sachs also have losses in their fixed income investments. However, it is temporary, and the price of bonds fluctuates temporarily. Bond owners do not sell these securities, and they will eventually receive all their money. This means that the notional loss seen when prices change is not an operational risk for big banks, which can hold on to these bonds and not collapse.